We have 6 great companies. They are doing various things to partner with financial institutions to serve their customers, to make their processes more efficient. So the format will be very much like if you have been to a Finovate conference, this is going to be very similar to Finovate. Every presenter will have 7 minutes, exactly 7 minutes. I'll be keeping the time, and they will do a sort of a pitch of the company. And there's no prize, unfortunately, but hopefully this will give the audience an opportunity to have a taste of what they do, and hopefully, you know, you will have an opportunity to connect with these firms after this conference. So we have 6 great companies, as I mentioned earlier. We have David from Ocrolus, we have Peter from Cincoterra, Kareem from FairPlay, Linda from Transparent, Philipp and Shana from Deposit Solutions, and last but not least, Laura from Stratify. So let's begin with David. David, you are on.
All right, thank you, Dan, and nice to be here. Hi, everyone. Hope you're having a good day so far. So my name is David Snitkof, and I'm VP of Analytics at Ocrolus, which is a company that helps financial services companies make high-quality decisions with trusted data. And we do that mainly by unlocking the data that is hidden and hard to reach deep inside complex financial documents, whether those are bank statements, tax forms, IDs, pay stubs, utility bills, or the like. We're helping financial services companies do that. And, you know, I've been with the company for about a year, building this analytical and data business. But before that, worked at Cabbage as head of analytics and data strategy. Before that, I had my own startup called Orchard and had worked in a bunch of different large banks and financial institutions, actually making the lending decisions, making the risk policy. And so it's very interesting in what I do every day today, which is work with lenders who are our customers to help them make better decisions, to help them manage their credit risk, to help them prevent fraud, to help them operate more efficiently by being able to process documents, make sense of the data, integrate digital and document-based data streams, and ultimately get capital to their borrowers and increase the availability of financial services in a cost-effective way. So let's go here to the next page. So this is our mission, which I alluded to. You know, we want to help people make high-quality decisions with trusted data and in an efficient way. It's actually hard to do all those 3 things at once, but it's one of these cornerstone things as a part of infrastructure for both the fintech firms that we see as so ascendant today, as well as every bank that's trying to compete in an even more competitive financial ecosystem. Let's go to the next page. We're lucky to work with so many of the best clients in the industry. We work with banks, we work with newer fintech companies, we work with more established fintech companies, we work with other really great fintech infrastructure providers like Plaid, and we work with companies in mortgage who are rapidly digitizing as that industry faces unprecedented demand and a really interesting past year in which they've just had to digitize, and the winners have done that very quickly. We're lucky to be a very fast-growing company. We're one of the fastest-growing companies in the country, named last year as the #1 fintech in the Inc. 5000, fastest-growing software company in New York, and this year's even off to a faster start. Let's continue. So this is a little bit about where we fit into the ecosystem. So there are credit bureaus. We're not a credit bureau, but we sometimes work with credit bureau data. There are account aggregators like Plaid, like Kodak, Finicity, Argyle, plenty of other companies in that space. We actually have a partnership with Plaid, and we integrate the digital data that they're able to provide from banks with document data that we're able to extract from things like bank statements, so that customers of ours, lenders, business lenders, consumer lenders, et cetera, are able to make financial decisions that are good, no matter where the data came from. There are basic OCR data extraction capabilities that we build upon. And then there are BPOs out there. And BPOs will do the work. A lot of what we do is bring together this human in the loop capability to not just get work done, but actually be able to take every single thing a human does as part of our process and use it to create labeled training data that makes our machine learning better and better and better over time. So despite our name, OCR, Ocrolus, we are not an OCR company. We happen to use OCR as an input technology, but that's only the first piece of it. Everything beyond that is tuned on financial data. Let's continue. So to give a quick overview of how we work, how our system works, how we work with our clients, when documents come into our system, we first help classify those documents. Think about a 500-page mortgage application and actually being able to figure out, well, this page represents a pay stub, this page is an appraisal, this page is a tax form, this page is a bank statement, et cetera, all throughout the full application, that then gives a mortgage lender or digital lending platform a way of working with these documents programmatically. Then we're able to capture the data off a document. Again, capturing data, capturing characters off the page is a commodity. That's not unique. What is unique is learning the structure of a financial document so that we can apply context and meaning to all the things that come off of the page. We have very robust fraud detection where we're able to detect tampered with documents and other suspicious activity. And then really importantly, we're able to take all this cleansed and standardized data and help lenders do cash flow underwriting, risk decisioning, fraud prevention, income assessment, proof of address, proof of income, cross-source validation, so they can make really good financial decisions with confidence. Let's go forward. Let's skip this page here. I want to quickly run through a few of the interesting examples where we've been able to use our technology for our clients. So Plaid's a great example. You know, we have a strong partnership with Plaid. We're actually one of the partners with them on their new income validation product. So if you are using Plaid for income validation, you can connect a payroll provider, but you can also upload a pay stub. In the background, Ocrolus is scanning that document, understanding the data, calculating income, and sending it back to the lender so they can make a good financial decision. Next slide. This is one of the most important things. And so I think as there is an incredible ascendancy of fintech companies having digital first solutions, having no branches, having no physical footprint, and being able to get financial services direct to the consumer, every bank needs to adopt that on its own too. And Cross River is just such a great example. They're a very small bank. They don't have a big physical presence. And yet, because of technology like ours, because of automation, during the PPP program, they've been able to get credit to more small businesses than any other bank, except for Bank of America and Chase. Companies that have 4,000 or 5,000 branches. So this is some of the power of automation technology. Let's move on. I kind of mentioned this issue where customers use us to integrate bank statements as well as aggregator data feeds. Let's move to the next slide. And I'll wrap up here, where our goal as a company, and this is what we do with our clients every day, is to help them understand data from multiple sources, whether those are documents, digital data feeds, third-party databases and APIs that we connect to. And we don't just take the data, we combine it, and we combine it together. We generate meaningful cash flow analytics and ultimately help people make better underwriting and risk and fraud and account management decisions. So I'll leave it there. I know we have plenty of presenters, a lot of really interesting things to show. Hope we get to do some Q&A, and I'm happy to answer any questions either during the session or afterwards if you want to contact me.
Please take it away. So that's David from Ocrolus. Thank you very much. Now let's hear from Peter from Cincoterra. Peter, please take it away.
Everyone, I'm Peter Hazlehurst, most recently and current CEO and founder of Cincoterra, which we began on a journey about a year ago. Most recently, I was leading Uber Money, which is payments risk and financial services for all of Uber across 65 plus countries and moving money everywhere, helping people ride and spend on the platform, and paying drivers and couriers and so forth across the globe. I also did a stint at Google, working on Google Wallet and Pay by Gmail and things like that. And then I spent 7 years or so at Yodlee, building out all the products, creating personal finance for the web, bill pay, funds transfer, you name it, for all the really big banks. And way back in my career, when I first came to the US, we built one of the first Windows-based core banking systems called Phoenix, which is still available for sale. And sadly, my code never died. And it's still running many community banks across the US as we speak. Let's go to the next slide. One of the observations that I would have, having been in all sides of this marketplace, buyer, seller, builder, etc., is that it's pretty clear that now more than ever, there's this challenge that's coming into the market of what's the future for a community bank, and how will fintechs work with them to be successful. And if we can figure it out and collaborate and partner together, we're actually going to be able to generate a lot of activity for consumers, create a lot of value for everybody. It's quite an exciting time. We go to the next slide. One of the things that we figured out as we started to build Cincoterra was there's essentially a two-sided problem in the marketplace. If you're a community bank, the biggest fear you have about working with fintechs is, what are you going to do from a compliance and regulatory risk perspective? How are you going to keep track of what does the fintech do? How are they honoring their commitments to do KYC, AML, and so forth? And it's quite a risk that you might choose to take. And how can we help you deal with that? If you can get over that risk and you can understand how to do the business, then the question is, how do you operate and how do you execute and how do you build and what sort of technology should you use? In effect, most of the banks that we work with are struggling with, we know we want to participate, we're scared about the risks. Even if we can get over the risks, how do we actually operate the service and how do we do it efficiently and so forth? And if we can get over that, like, how do we build our own sales force to go and find fintechs to work with us? So it's a pretty interesting set of challenges and opportunities for the community banks if you could solve that. If you're a fintech, your biggest challenge is, after you've decided you're going to build something, is will you be able to find a bank to launch? And at the moment, most of the community banks that are in the fintech as a service space or the banking as a service space are either sold out or very close to sold out. So you go and build everything you want, and then you say, and then you start shopping and saying, hey, community bank, will you bank me and can I use your license in order to go to market? Takes a long time. You've actually got big challenges of fintech of signing all these different deals with different bespoke vendors, from KYC vendors to fraud to risk to someone to do card production and so on. It's a complex game as a fintech to get started. And then when you get all done, then the bank comes along and says, well, hang on a second, don't forget about compliance and regulatory support. And as a fintech, most of them sort of stare at the wall and say, I don't know what that means, and could you help me? So the partnership opportunity is, how could you bridge all of those problems and challenges and create a solution in a marketplace to help both? Next slide, please. And so this is Cincoterra in a nutshell. What we do is we seek to build that marketplace that allows fintechs to focus on what they do really well, which is building a consumer experience and satisfying their customer markets and users. And we help the community banks build, operate, and monitor the fintechs for growth and compliance. And it's very symbiotic. And both sides of the marketplace come together. We actually start to unlock supply problems, which are, there aren't enough community banks in the marketplace. So overall, the goal here is getting consumers, customers, access to the next neobank for dentists or doctors or lawyers or the environment and so on, while partnering up with the community banks to managing their risk. And if we can do that and we can be really efficient, we can bring more and more fintechs to market, and that will be great for the innovation that's bound to happen in the marketplace. Next slide. In terms of things that we do and things and capabilities that we offer the fintech, you should think of us as a bunch of big chunks of activity. First and foremost, we help both parties, banks and fintechs, deal with everything they need to do to build and operate the actual virtual bank that is the fintech itself. So everything's rolled up into a dashboard. We help you with KYC, we help you with banking balances, We help you understand reconciliation across Marqeta and Galileo and ACH processes and payments and so forth. We've got a built-in case management tool that helps get marketing approvals from your bank partner and so forth. And then from an operational perspective, for the fintechs themselves, we offer APIs right now to support all of the needs around keeping track of the ledger of all of the users and capabilities of the customers. We're offering ACH processing and payment services. Coming up at the end of the summer, early fall, we'll offer full card management capabilities, statements as a service, you name it. Think of us as a one-stop shop for a community bank to offer all of the capabilities to the fintech, and from the fintech to sign one contract with their bank partner that offers the entire stack of capabilities. Let's go to the next slide. If you look at an example of one of our customers, this is Coastal Community Bank. What they have done is start a practice of being a fintech bank on behalf of a bunch of fintechs. And what's really interesting about how they've succeeded is they've continued to build out their capabilities and onboarded a bunch of fintechs. They came to us at Cincoterra because they wanted to operationalize and scale. Their interesting problem is they've got so much demand from fintechs. How can they be more efficient and more effective? And we're helping them scale up and service multiple types of fintechs over time. Next slide. So macro, the goal here and why we're special or why we're interesting is we see both sides of the marketplace as places to combine and to work together. We build a business model that is leveraging the success of the community banks and the fintechs. And the model is very efficient in the sense of we share in the upside together. So our business model is a 50-50 rev share with the net revenue earned by the community bank. As a fintech, you sign one deal with the bank. You don't sign a deal with Synctera, and you get to market as quickly as you possibly can. Next slide. So that's it. We help you get to market as quickly as you possibly can. We help the business manage and control their risk. And we're very excited to be able to start bringing to market a whole bunch of new fintechs in 2021. Thank you. Thank you.
Thank you, Peter. That's Peter from Cincoterra. Next, let's welcome Kareem from FairPlay. Kareem, please take it away.
Hi, folks. I'm Kareem Saleh. I am the founder and CEO of FairPlay, the world's first fairness as a service company. Next slide, please. So for those of you who've been following the headlines, I'm sure you've seen that algorithmic discrimination is everywhere. And even the most sophisticated companies are struggling to combat bias in their decisioning systems, whether it's United Health, Amazon, Goldman, Uber, Facebook. They've all been subject to allegations that their decisioning systems discriminate against people of color, women, and other historically disadvantaged groups. Next slide, please. And I hate to be the bearer of bad news, but lenders are especially susceptible to charges of algorithmic discrimination. That's because the training data that we all use to build our marketing, underwriting, and collections models underrepresents historically disadvantaged groups like people of color and women. The tools that are commonly used in financial services for detecting and remediating bias, whether it's leave one covariate out or BizG, are extremely primitive and overlook a lot of discrimination. And then finally, fair lending regulations themselves are vague and subject to considerable interpretation. There's no consistently applied definition of fairness. There's no consistently applied threshold for fairness. Next slide, please. And so algorithmic discrimination in decisioning systems is exploding at a time when lenders face unprecedented scrutiny of their fairness practices. The new administration has made very clear that after a hiatus, fair lending enforcement is coming back in a very big way. The K-shaped recovery coming out of the pandemic has kept issues of economic inequality at the top of the national agenda. And frankly, whether it's the death of George Floyd or movements like Black Lives Matter, consumer groups and other advocacy organizations are asking financial institutions if they're doing their part to advance the cause of racial equity. Next slide, please. All of this means that as lenders, your fair lending compliance must evolve. Today, fair lending compliance is time intensive, it's highly manual, and it's extremely costly. What's worse is that fair lending compliance today leaves you with residual regulatory risk, because most of what passes for fair lending compliance today doesn't actually make your lending practices fairer. It just seeks to justify or legitimate disparities in your models using clever statistical or legal arguments. Next slide, please. So we've built a tool, FairPlay, that seeks to bring fair lending compliance into the 21st century. We believe that fair lending compliance should be fast, rigorous, and cost-effective. What's more, we believe that fair lending compliance should actually enhance the fairness of your lending practices, not just seek to legitimate past biases. And it done right, we believe the fair lending compliance can allow lenders to extend credit more safely, efficiently, and profitably. Let's take a look at how our tool works. Next slide, please. The FairPlay tool starts with a fair lending analysis that is rigorous, fast, and free. Our system can assess your marketing, underwriting, and collections models for pricing and approval rate disparities within minutes. We apply fairness metrics and thresholds that regulators commonly use in exams. And you get to review this fair lending analysis before you pay us a penny. Next slide, please. Our FairPlay's Fairness Optimizer fine-tunes your existing models for fairness using your current data and variables. We apply some of the latest AI techniques to identify if fairer models exist and if being fairer has a cost. And we document that analysis so that you can provide your internal audit teams, your examiners, your regulators, et cetera, with hard evidence of your commitment to fairness. Next slide, please. What I think is really cool is our second look functionality. Our second look functionality basically requires you to upload your declines into our system, all the borrowers that you said no to, and we run a second look analysis that seeks to identify creditworthy borrowers that are below your traditional approval thresholds that resemble good credits on dimensions you might not have previously considered. What's really cool about Second Look is that it allows you to leave your primary underwriting, collections, marketing models in place and augment them with this Second Look model. Next slide, please. How do we do all this? Well, our tools are powered by some of the most advanced AI techniques, whether it's adversarial networks, generalized location models, optimal transport theory, kernel methods. We are constantly reviewing the latest mathematical advances in fairness and incorporating those methodologies into our system. Next slide, please. The result is that we think we've built the lending industry's most comprehensive fairness solution. We'll do your bias detection, your bias remediation. We'll identify creditworthy applicants you rejected. We even do model confidence so that you can identify blind spots in your current models where you may not want to trust their predictions. Our system generates actionable adverse action reason codes so that you can give rejected applicants a roadmap for how they might be approved in the future. And we document all of that in ways that your regulators, examiners, and auditors are used to seeing. And our system even monitors your models in real time to provide real-time fairness analytics and ensure your fairness doesn't degrade in production. Next slide, please. The result is that FairPlay can transform fair lending compliance into an engine for growth and goodwill. You can drive profitability and fairness, reduce your regulatory risk, identify new creditworthy borrowers, strengthen your brand, and ultimately focus on the things you do best, which is serving your customers with great financial services products. Next slide, please. It's very, very easy to implement our system. You can use it in our environment, host it in your own environment. Our cloud infrastructure providers offer government-grade security. All of your data is saved and stored on servers in the United States. And it's seamless to integrate the outputs from our tools into your existing workflows via a very simple API call. Next slide, please. The one message I want you to leave here today with is that FairPlay is a better, faster, more cost-effective fair lending compliance solution than anything else in the market. Today, you may be paying tens or even hundreds of thousands of dollars for a fair lending analysis that's powered by outside consultants and lawyers who leave you with the residual risk of fair lending compliance problems because they don't do anything to remediate bias or disparities in your decisioning systems. With FairPlay, you get that basic fair lending analysis for free. Plus, you can auto-tune your existing models to optimize them for fairness. You can use a second look process to make sure that there aren't good borrowers that you rejected. And we provide all of the regulatory documentation you need to provide hard evidence to your auditors and your regulators of all of the ways in which you've embedded fairness considerations into your decisioning systems. Next slide, please. For those of you looking to bring your fair lending compliance into the 21st century, we'd love to hear from you. Please contact me at Kareem@fairplay.ai. Many thanks.
Thank you. That's Kareem from FairPlay. Now, next, let's hear from Philipp and Shana from Deposit Solutions.
Yes, good afternoon, and thank you for having us here. Next slide, please. It is my pleasure to introduce Deposit Solutions, Shana Hennigan, our head of sales and origination, and myself, Philipp von Girsewald. I'm the CEO of the US business to you. Our company was founded about 10 years ago in Europe, and in Europe we have by now transmitted more than $30 billion in deposits. We're working with more than 150 financial institutions and are present in 21 countries. Next slide. At the end of last year, we have finally launched also in the US, and our B2B proposition, and as well our B2C distribution channel, SafeBetter.com. And now Shana will explain to you what it's all about. Shana, over to you.
Great, thank you, Philip. And thank you, everyone. Next slide, please. Happy to tell you all a little bit about Deposit Solutions. We offer a fintech platform that digitally connects consumers who are looking for savings products with banks that are looking for retail deposits. For consumers, we offer greater choice and convenience as savers can access a variety of bank and deposit products through the convenience of a single account. And for banks, we digitally connect you to consumers across the US through customized marketing campaigns, our diverse network of distribution channels, and we bring brand awareness, national reach, and an efficient source of retail deposits. This is an administratively simple platform with a single custodial account for settlement and holding the deposits, and Deposit Solutions delivers the full deposit value chain from customer onboarding, KYC checks, recording, record keeping, reporting, and even a fully staffed customer service team. For the banks that are on our platform, they really have the same type of control and flexibility that they would have with their own direct deposit taking efforts. And it also provides a distinct online channel to test new products without really cannibalizing or impacting your local deposit taking footprint. Next slide, please. So the COVID-19 pandemic certainly accelerated the trend towards digitization, and I think really demonstrated the importance for banks to have an online channel to reach consumers and to raise deposits. And on the flip side, digital usage by consumers certainly increased, and it's not a trend that's going away. Nearly 9 out of 10 consumers indicate they plan to maintain their digital usage in banking, even when the pandemic is behind us and in-person banking returns. What Deposit Solutions offers is effectively a turnkey online channel or a virtual branch for deposits that community banks can connect to reach savers across the US and efficiently source deposits. And instead of building that online channel from scratch, what community banks can do is leverage our tech infrastructure, our operational efficiencies, that marketing expertise and affiliate network, as well as our partnerships with various distribution channels and their ecosystems of savers and consumers. So Deposit Solutions partners with various distribution channels such as registered investment advisors, wealth managers, other fintechs, and as Philipp mentioned, our own proprietary online deposit marketplace, SaveBetter.com. Banks, through a simple connection to our platform, get access to all channels and the savers on the other side. And in turn, these savers have a convenient way to connect to your bank and place deposits in your institution. Next slide, please. As I mentioned, a hallmark of the platform is the flexibility. This is meant to be your virtual branch for taking deposits, so you have full control over the types of deposit products you offer and ones that make sense for your bank and your balance sheet. The platform really can support anything from savings accounts and MMDAs to CDs with penalty, without, odd maturities, callable structures, and we offer an auto rollover functionality to really preserve that stickiness and stability of any deposits sourced through the platform and those important retail characteristics. There's no commitment with the platform. It's really meant to be that online tool and channel for banks to access when they need to raise funds, using the products that make sense for you, the rates that make sense for you, or simply that digital outlet to test new deposit offerings. Next slide, please. We like to say participating in our platform is as easy as 1, 2, 3. We try to keep it simple, and there's really just an easy agreement with deposit solutions, the opening of an omnibus account on your books and records to facilitate that settlement, and then it's picking your products. Once that's done, we are off to the races and getting your bank's name and story and your deposits out through our network and in front of consumers to facilitate that deposit raising. Next slide, please. And with that, we would thank the Philly Fed for giving us this opportunity to present deposit solutions, and we would welcome any banks in the audience to test our platform, access consumers across the US, and raise some retail deposits through deposit solutions. If there are any questions, Philipp and I are more than happy to answer them, and we would love to continue the discussion on deposits with you. So thank you.
Thank you, Shana and Philipp. That's deposit solutions. Next, let's go to Laura from Stratify. Laura, take it away.
Thank you so much, Dan. Hello, everyone. I'm Laura Kornhauser, co-founder and CEO of Stratify. First, I want to just take a moment to thank everyone at the Philly Fed Reserve and the Conference of State Bank Supervisors for putting together this great event. And thank you to everybody here on the line today for taking the time to learn more about Stratify and the other great companies presenting. So at Stratify, we offer a modern credit and risk decisioning engine that helps banks make precise, audible, risk-based decisions, decisions like who to lend to and who to investigate for potential fraud. Next slide, please. So a little bit about myself. I spent over a decade at JP Morgan helping some of the company's largest customers build, structure, and deploy risk management strategies in the public and private markets. I'm joined on our management team by experts across data science, development, and finance. We were founded in 2017, but at our time of our founding, we had over a decade of research and development into the core technology that I'll be telling you about today. Next, please. And what that core technology and the solutions we built around us help us do is allow lenders to make more informed credit risk assessment decisions, allowing them to earn millions in additional profits without introducing operational or regulatory risk. We like to say that our technology helps you answer questions too important to get wrong and too sensitive not to understand by providing a level of analysis and transparency unparalleled by other tools and solutions in the market. Next, please. A little look at the landscape today. While there's a lot of discussion of the benefit that AI and machine learning can provide to financial institutions, a lot of the investment in those technologies hasn't made its way into production. We believe this is mainly because of the black box problem associated with many of these technologies and the lack of transparency that they provide to institutions like yourself. Another key issue right now that Kareem touched upon very well in his presentation is the bias issue out there. Citi recently estimated that the US GDP has lost 13 trillion in value due to biased lending activities alone. We believe very strongly and have been able to show that our patented bias detection solution has the ability to close this gap and help lenders not just detect biases, unconscious biases in their lending models, but also remove those biases from their decisions going forward, addressing this very important and very big risk. Next slide, please. And sure, don't have to tell anybody on this call the massive importance of not only the cost to our economy in those trillions of dollars of biased lending practices, but also the significant financial and reputational risk. Just a few examples of companies caught in those, the headlines that none of us want to see our companies caught in. Next slide, please. So how do we do this at Stratify? We do it by offering a tool that bridges the gap between traditional methods for building credit risk models and making credit risk decisions and cutting edge AI machine learning, allowing folks across your organization to effectively collaborate and communicate on these models, breaking down historic silos that may be present at your organization right now, such that the folks that are building a model have the tool and technology they need to build and analyze very powerful models that allow you to say yes to more borrowers without increasing risk. Then the P&L owner is able to easily understand exactly what those data and models mean for that business and what profitability those models will drive. And then also your compliance professionals and external regulators can understand exactly how those models work, both on an aggregate level and on each individual decisioning level, and helping you importantly identify and mitigate bias in those decisioning models such that those biases do not propagate forward in your ongoing decisions. And you have all of the records, proof, validation required should you ever have a regulator come knocking and ask about your modeling, both on an aggregate or on an individual decisioning level. Next slide, please. Here's a look at some of the results we've achieved with just a few of our customers to date. In credit risk assessment with one of our lenders, we're able to increase loan approvals by 2.4 times, allowing them to say yes to many more borrowers, but also by slightly reducing the expected default risk of those models. That was a result achieved by using our tool to enhance their credit risk model. In fraud detection with Aflac, we were able to drive a 3 times reduction in their false positive rate, allowing them to focus time and energy on the true fraudsters and mitigate fraud throughout their organization. And then with one of our small business lending customers, we were able to help them get models into production a heck of a lot faster. Things that used to take them over a month to be able to do, they were able to do in just a day with our tools. Next, please. So all in all, our fully auditable credit risk assessment solutions are really focused on helping you increasing your approval rates so you can say yes to more customers, build trust with your existing and future customer base through the differentiated level of transparency provided by our solutions, and minimize risk throughout your organization. Next, please. And I'll just highlight one thing on this slide. We are able to models with order state machine learning, so even at time changing market, particularly helpful. And next slide, please. Very easy to get started with us. And last slide, please. Would welcome the opportunity, one more please, would welcome the opportunity to connect with anybody after this event. Here's my contact information. We are currently offering a free fraud risk and credit model audit for anybody that is on the line today. So feel free to reach out to me at laura@stratify.com if you'd like to learn more. Thank you so much, everyone, for the time.
Thank you, Laura. Now, last but not least, let's have Linda from Transparent. Linda, please.
Thank you, Dan. And thank you, Jalapa, for inviting me to speak today about our company, Transparent Financial Systems, and our blockchain-enabled digital dollar product, Zand. Hello, everyone. I'm Linda Jeng. I'm the Global Head of Policy at Transparent Financial Systems. I'm also a Senior Fellow at Georgetown Law School. Before that, I was with the Federal Reserve Board, so it's great to see so many familiar faces. Transparent Financial Systems was founded by the late Paul Allen of Microsoft to help address the problem of slow payments in the US. And today, I would like to talk about how we at Transparent are helping to make payments more efficient, cheaper, and faster for American businesses. Next, please. Businesses have payment relationships with other businesses. They make regularly scheduled payments to their own cohorts of business partners in what we call transactional communities. Transactional communities can be any group of participants with shared objectives, and these groups can range from commodity traders to farmers to community banks. Our target users for our digital dollar product are US businesses in these communities. And each and every community can stand up their own Zand payments network. Each Zand network relies on banks to service them. I can't agree more with the first panel about the importance for banks and fintechs to partner with each other. We believe Zand is a great opportunity for banks to get involved in financial technology. We've designed Zand so that it's free for banks to become Zand enabled. No fees, no proprietary software. Banks just need basic APIs. Not only does Zand provide banks an opportunity to participate in fintech ecosystems, Zand also helps banks build more deposits, stickier deposits, as they service existing customers and attract new customers. Next, please. In today's business-to-business payments world, we have a snail rails problem. We send a cash payment, it takes at least one business day, and sometimes up to 5, just to settle, particularly when you make a payment on a Friday before the weekend. Currently, faster forms of payments for companies are expensive, while cheaper options are slower. This problem results in costly inefficiencies for US companies. Next, please. Different attempts have been made to modernize the US payment system, such as cryptocurrencies and stablecoins. But each have their own set of problems, and all have missed the mark. Cryptocurrencies are volatile, and they are unreliable stores of value. Many lack privacy and security features. Stablecoins? Well, are they even stable? Next slide, please. So as we design our solution, we at Transparent are keeping what is working in our payment system and have dropped the rest. We have taken lessons from the blockchain crypto world and applied them to traditional finance to create a blockchain-enabled digital representation of the US dollar. We applied legal and regulatory requirements. We partnered with regulated and responsible banks and financial institutions to build networks within which digital dollars can be exchanged, created, and redeemed. And what did we drop? We've cut out unnecessary and slow payment intermediaries in order to make payments faster, cheaper, and more efficient. And more importantly, to make payments more equitable by handing control and power over to the users. Next, please. Why should businesses choose to use our digital dollar payment solution? Users can transfer value real-time, 24/7, 365 days a year, and greatly reduce their cash settlement lags. users are owners of their own networks and can set their own rules and conditions. They have privacy, security, and accuracy. What also makes our product attractive is that Zand is designed to operate within the current legal and regulatory frameworks, and it leverages the US banking system to hold funds so banks can attract more and longer-term deposits. Banks can support Zand networks without additional proprietary software. Again, they just need basic APIs. Next, please. Zand is your money, your network, your rules. Zand networks are distributed, permissioned networks built around members who conduct business with one another and wish to benefit from holding cash longer, exchanging value on a real-time basis, settling obligations on demand, and reducing risk and costs associated with these activities. Zand is a multi-stakeholder digital dollar network for which parties operate within the existing regulatory frameworks. Businesses can empower themselves to form and become members of their own payment systems. Both members and the trust must open bank accounts with Zand-enabled banks. The trust verifies intra-bank movement of funds between trust and member accounts for creating and redeeming the digital dollars into US dollars. The validators publish and approve blocks of transactions. Finally, Zand-enabled banks hold funds for members in the trust and enables intra-bank fund transfers. We at Transparent envision a robust and varied ecosystem of Zand payment networks, each an expression of the requirements and needs of its individual Zand member community. Last slide, please. So I'll wrap up here. Thank you for this opportunity to talk about our B2B digital dollar payment solution, Zand. If you have questions, we welcome your inquiries. I can be reached at linda@transparent.us, and I look forward to your questions in our Q&A.
Thank you, Linda. Sorry, we're really running out of time. I wish I had a chance to ask some questions to our panelists. So I really want to take this opportunity again to thank Philipp and the CSBS for hosting this, to give these great six great companies to have a chance to present their solutions to the audience. And maybe I should have said this at the beginning. So the Philipp or the CSBS, they do not endorse any of these companies, and this is really, they're presenting their solutions on their own. And last but not least, let us thank David from Oculus, Peter from Cincoterra, Kareem from FairPlay, Philipp and Shana from Deposit Solutions, Laura from Stratify, and Linda from Transparent for the great presentations. Thank you.